I'm going to do a very, very brief introduction to Jeffrey because actually the first question I'm going to ask him is tell us about yourself. So just generally so you know who Jeffrey is. Jeffrey is a member of the International Sustainability Standards Board. But when I think about people that could be with us today, I can really think of very few people more qualified than Jeffrey is, particularly with his background. He is an academic, University of Texas at Austin. But if you look at what he's done in his career over this period of time, it's been very much in the area of sustainability. A variety of boards he's been on, and other things he's been in sustainability area as well as establishing standards in that area. So again, as I say, I couldn't think of anybody better qualified to have come before us today to be able to talk about sustainability. So with that, we're actually going to tee up our very first question because it's going to help inform the rest of what we're going to do. So Jessica, if you can bring up our first question. It's basically, what is your primary role? You got and you got to pick one. I know some of you like to pick more than one, but you got to pick one. All right, very good. Good. So I can see that. Jessica, can everybody see the results? Okay. You share results? Okay. So Jeffrey, I hope you can see that as well. So we've got some definitely private company. We have some public company as well, and that as well, a variety. Okay, academic. So it's pretty split. So we'll be able to pick a lot of different people out in that. Okay. So with that, okay. I want to welcome you, Jeffrey, to our lifelong learning event today and our kind of lunch and learn. We just don't provide we're providing the learning, not the lunch. That's on everybody else for that perspective. And so my first question is, you have actually served in a variety of roles in your career. I alluded to them, academia as well as a regulator. Please provide a summary of some of your career experiences so they kind of get a flavor for where you're coming from.
Yeah, sure. So first, thanks, Scott, for the opportunity to be here. It's great to see people interested in what's going on in the world of sustainability, and so hopefully I can provide some insights into that based on at least my experience. But like you mentioned, I started my career as a professor teaching financial accounting. So I got my graduate degree from Cornell University and landed my first job at the University of Texas now more than 20 years ago, and was there at UT Austin for the first 6 years of my career teaching financial accounting. And many of you will have heard of in the academic world, you have to publish or perish. And so I can attest to the fact that if you don't publish enough, there's a version of perishing that happens. And but it turns out you don't disappear necessarily. And so I had to look for another job. So early in my career, landed in Atlanta at Georgia Tech, and was there over 11 years, although I took a couple breaks to go do some other things in that window, and then later had the opportunity to go back to UT, and so actually I'll be starting my 6th year back at UT. So it's been a nice sort of full circle there. But along the way, while I started my career just really devoted to what I think of as financial accounting and thinking about financial statements and and the role that they play in well-functioning capital markets. I got really interested in how those standards get developed. So I had the opportunity to start, getting to know the operations of the FASB a bit better, and then ultimately served on their staff, and then served 4 years on their senior advisory committee, FASAC, and then along the way that I also got involved in sustainability standard setting, and so I've been involved with that for about 12 years now. 10 years for an organization called ISSB, the Sustainability Accounting Standards Board, which I ultimately chaired up until the point that it was consolidated into the IFRS Foundation to help form this new international sustainability board, the ISSB. And I've been on that board since it started basically in 2022.
Great, thank you. See, now everybody has to agree with me. We have a real qualified individual here to be able to do that, which actually gets me to that second question I have is that most people's journey into sustainability is not a nice straight line. It's not where they really start. So how does someone end up in what's been your experience, but also what you observe, because you work with a lot of other people in this area yourself. So what is the way into this area of sustainability?
Yeah, I think my path is maybe a little different. I think for a lot of people, what happens is they end up becoming passionate about a particular issue that is in the world around them. At some point, they decide that they care about it enough to want to do something with it. And so I think people that get involved with sustainability often are very focused on particular issues as kind of like their passion. And they may find ways to involve that in their work, ways to impact that through their work, to do their job better, for example. But or they may think of it as more like a philanthropic endeavor. For me, I would say like sustainability kind of found me, and it found me at a time in my career where I was really looking to be involved with something a bit bigger than my own sort of like research agenda, my own career. I think, having taken a long time to be successful as an assistant professor, finally making tenure after, it was almost 10 years. And I don't think that's why they call it tenure. It's like, but it did feel like it was a long time. And so, when I finally started to have some of that publication success and feel a bit more comfort in the profession, I started to look back and see that I had the luxury really of being in a great graduate program that allowed me to focus just on my own research agenda, and then being at good universities that also supported that focus. And along the way, I didn't really have any significant family care issues or anything. I mean, I just really had just been focused on my work for 10, 15 years, it felt like. And that resulted in some success. Had it not, I think shame on me, because I had so much time and support in doing that. But it turns out like I really wanted to be involved in something bigger. So I was sort of like looking for a thing to become passionate about. And I had no idea what it was. I really wanted to be involved with something that I thought would benefit from my involvement in a way that was, not really easily replaceable, because it wasn't just going to be like time or money, although those are certainly important things to donate to causes. But I really had no insight into this. And then, as luck would have it, the phone call rang, and a woman who was the founder of ISSB was looking to build out this organization. And she, had found my name. And I think because I had been involved with standard setting from a financial accounting perspective, she was looking for people that would understand how you develop standards and that could contribute to that. And so she said that, her goal was to help develop standards that would be industry specific and would help companies in given industries think about the sustainability issues that would be important from a capital markets perspective for investors to understand. And what I'd be interested in trying to help develop those standards. And I really felt like I had no knowledge of the sustainability issue, so I felt really unqualified in that sense. But she sort of saw the value that I could bring from the experience that I did have. And so that started my now going on 12-year journey to understand sustainability issues. And I would say that, I just constantly feel like I'm still learning, actually. But it's been really, really pretty amazing. And I would say like I didn't start it as like a way to sort of advance my career. I was really looking for something outside of that. But the irony is that it's been in a lot of ways like really very beneficial to my career in a way that was completely unexpected. So, it's funny how life is like that sometimes.
Yeah. Thanks for sharing that. Yeah, my experience has been is most people I talk to, it's very similar to yours. You didn't start out there, but things came along the way, opportunities that opened up. And so basically everyone that's here today in this space had to learn how to get there, right? I mean, there was a series of experiences to be able to get that, which means if you're late to the game, you don't have that much to catch up, right? Because it's not, it's not like it's been around 100 years and you have 100 years of history. It's actually relatively short with that. And so that actually takes me to the third question. And I'm going to stop after that. And then we're going to see if anybody has any questions for you, Jeffrey, which is what I don't say one of the issues, but one of the challenges with sustainability is everybody sort of has their own definition of what it is. When you throw that term out there, everybody kind of thinks they know what it means or has their own vision on it. So how do you, when you're on a board that's established the standards for sustainability, so how do you think about it? How do you put parameters around that dialogue?
Yeah, that's a really good question. I think one of the challenges is that the word gets used in a lot of different contexts, and so you really need to understand that context because there's not going to be one single meaning, given the different contexts in which it gets used. But when I think of it in the context of corporate performance, I'm thinking about trying to think about like how are we reflecting a company's ability to continue to create value through its business activities, not just today, not just in the past, but looking over the short, medium, long term in the future. Right? So really thinking about what is sustainable about what they're doing. What are the risks and opportunities associated with that?
Great. So with that, I will just look to see if anybody has any questions. Either raise your hand or you can put them in the chat or anything like that. Feel free. Where we're going next with questions is Jeffrey's going to explain a little bit about what ISSB does. But before we make that turn, I want to see if anybody had any questions or comments before we move on.
I think you said ISSB, but you would be the best person to talk
I'm sorry,
about.
I meant it. Yeah, sorry, that's my board. Yeah, sorry. And ISSB, let's keep it that way, right?
Yeah.
Either way to do it. It's too many initials, which is actually coming up with a question we have in a minute on that as well. Okay, so since you are a current board member, would you just sort of describe, what the role of the board is, how it's organized, how it's funded, what do you do? I think just generally, I think it'd be pretty intriguing to this group to say, well, how does this work? It's a relatively new board, right? So how does it work?
Yeah, sure. So it is at the end of the day, like it's an accounting standard setter, and so it is structured in that form and operates in that sort of similar fashion. So the more you know about the FASB or especially the IASB, the more you can sort of guess about the way that the ISSB operates. But the way I think about that is that we sort of started with, say, the FASB. The FASB has 7 board members. And then they have a research team, and then they have a conceptual framework that guides their thinking and deliberations. But then there's a whole set of due process that they go through to decide how to design accounting standards. And the work of the board is to help kind of shape the objective of the board's activities to execute on the mission of, say if we're talking about the FASB, Financial Accounting Standards Board, and that would be to help produce standards that would reflect companies in companies' financial statements, the economic reality of that period's performance, and the team, the staff, the technical staff at the FASB, they do the hard work of sort of like going out and like taking consultation, analyzing that, engaging with stakeholders, doing fundamental research, and then bringing all that to the board and saying like, well, here's our best thinking. What do you think? And then the board gives an opinion, and then kind of like you go through till you get to the point where you propose something and it's an up or down vote at the end of the day to adopt it. The ISSB is very similar to that. The IASB is focused on financial accounting, and so it's very similar to the FASB, but has a larger board, 14 board members. With you partly need a bigger board if you're going to try to reflect the different jurisdictions around the world, just to get some of that. And so the structure of the ISSB is pretty similar to that. There are 14 board members, and we have representation from the Americas, from Europe, Asia, and Africa. And so that's basically it, you know. But part of it is like, rather than focusing on just how to create financial statements that reflect a company's financial performance and operating position, the ISSB's mission is really to, I think it was like really supplementing that by developing disclosure standards that are going to reflect the sustainability related risks and opportunities that could reasonably be expected to affect the company's prospects. And that should be closely connected to financial statements at the end of the day.
Yeah, you mentioned that. Mark Beasley put a question in the chat about basically comparing establishing standards for sustainability versus accounting standards. So is it the same? Is it different? How did you just talk about the process, but is you actually mentioned a conceptual framework? Do you really have a conceptual framework? And so that would be the question. How is it similar and different than the financial statement?
Yeah, there's a lot that's similar, and I think there are some things that are maybe a bit different. You know, in some ways I would think of like the goal at the end of the day is very similar. The goal being to try to provide investors with decision useful information that could affect their capital allocation decisions, including not just buying and selling shares, but also thinking about, you know, lending money and thinking about, you know, exercising rights that would be associated with the type of financial instruments that investors are holding. But there's some big differences, and one of them would be that you know, traditional financial accounting is focused on trying to assess past performance and reflecting that along with like the, you know, the most recent financial position of a company through the depiction of assets, liabilities, and equity, revenues, expenses, cash flows in these performance statements. And so, you know, the structure of that means that you know, like there is a debit credit system. You know, if you're going to affect the totals of the financial statements, you got to kind of get into that, and you get in there. And so everything's got to be measured in currency units, and it affects the totals of those financial statements. So, you know, so I think like that produces really useful information, but it also requires some pretty significant constraints. I would argue that one of the reasons why measurement has been so intractable, I think, for so long, it's been such a thorny issue for 100 years in accounting, is because the debit credit system doesn't really allow you to measure something two different ways and put it in the system two different ways, unless you're going to keep two different sets of books. And so disclosure doesn't have those same constraints. Disclosure is just trying to think about like, well, what would be useful information? So I think the challenge with disclosure ends up being a bit different. You know, it's more like, you know, rather than being constrained to a single measurement, it's more thinking about, well, what are the right things to measure? And so how are we going to capture that? You know, from the ISSB's perspective, we're still thinking about the types of sustainability issues that could affect a company's prospects. And so we're still thinking about that in terms of like, how is this going to sort of play out in future cash flows? If this isn't going to have any impact on the company's cash flows today, tomorrow, or in the future, then it's not a very big deal for the company. But if it is going to potentially affect those cash flows, we're not necessarily constrained to try to, you know, measure that just in currency units and put it into the totals of, you know, some forecasted future financial statements. We can say like, just tell us about what's the company doing? What's it exposed to? What are the opportunities? What's the strategy around that? And so I think it's a little bit different, but then it has, you know, I think some real advantages, because then you can think about measuring things. I think of it as like measuring it sort of one layer deeper, a little closer to the underlying business activity, rather than thinking about what are the financial implications of that, measuring it in currency units. So you can talk about, you know, what incidents there have been related to your employees, or what a turnover happens to look like, or what sort of natural resources the company has or is looking to acquire or at a risk. So you can measure those things in a lot of different ways, and that really provides a rich landscape for complementing financial statements. But then I think the flip side of that is that that it is not so obvious how to aggregate all of that together. And I think this is in really ways sort of the inverse of the challenge with what we've known for a long time, that, you know, if you take quarterly earnings per share, that is just like, you know, that's a highly aggregated number. It's very short term. It is not the only thing you should be focused on if you're thinking about the financial performance and well-being of a company. But you can add it all up. And so anytime you can like highly aggregate measurements across a wide variety of activities that sort of sit underneath that number. The challenge is knowing, like, have you missed anything significant by aggregating too much? But I think the flip side for sustainability disclosure is thinking about, well, if environmental performance is looking strong, but human capital performance is looking weak, or even inside of those issues, if there's a good and a bad, how do we know like net how a company is doing? And I think what we're kind of constrained to do there is do less of the analysis and more of just the performance reporting, and let the market sort of figure it out. So I'm a big proponent of thinking like, let's measure key business activities that investors want to know about, but let's not try to figure out what that's worth to them in a sense.
Yeah, one of the things that comes very obvious when you read your standards is the narrative is going to be critical, and there's lots more narrative in it than there would be said in a set of financial statements with that.
Absolutely.
Just for everybody's benefit, there's a couple of questions coming in about the difference between U.S. and international. That is a question later, so I'm not ignoring that. We will get to that later. But there is a question about stakeholders. When you're setting the standards, who do you consider to be the stakeholders? I think you referred to it a couple of times, but they want to be define that for them.
Yeah. So I would say that like the IASB and like the FASB, we're very focused on thinking about like what would be useful to investors. So what could reasonably be expected to affect investor decision making. And so for that, we know that investors are not a monolith. They're not all the same. They have different horizons, different strategies, all sorts of different things. So we can't ask for everything that might matter to any investor, but that's not really what financial accounting standard setters focus on. we're looking for that kind of like, we sometimes refer to as like the common information needs of investors. So what is their pretty reasonable agreement on this being an important kind of issue, and investors could have different bets on which way it's going to go. But like if that's a key issue, a good example I think from a sustainability perspective would be, you might have a view about hybrids versus electric vehicles versus traditional combustion engines. We're not saying what the right bet is in that market, certainly not in different markets around the world. But what we are saying is that if you're investing in automobile companies, that's kind of a key issue to be talking about, right? It's because, that's going to be partly what differentiates one company from another. So we're very focused on investors, but then because companies have to produce the information, companies also have that kind of like industry expertise. We also spend a lot of time engaging with the preparer community, and then there's a lot of subject matter experts that we also have to engage with. So this is in many ways very similar to traditional financial accounting standard setting, and because the ISSB is a global organization, we also have to make sure that we're getting feedback that is reflective of the way that businesses are structured, in different economies around the world, that also reflect the types of issues that would matter. The way I think about it is if there are sustainability issues that exist only in a particular country, or like they're pretty different one country to another, those aren't going to be great issues for a global standard setter to try to tackle. That probably needs to be handled on more of like a regional basis. But to the extent that this is the way that this business runs, and so these are the sorts of issues that arise wherever you happen to run those businesses, that's the good fodder for where we could focus on adding value.
Good. For those that aren't aware of your significant accomplishments so far, which is actually by setting standards is light speed, and getting the standards out. Could you really very kind of briefly summarize what you have accomplished so far in the area of issuance?
Yeah, well, first, I guess, is like coming into existence. So, it's like, it's no small feat to pull that off. So in the fourth quarter of 2021, the IFRS Foundation announced that they were going to establish the ISSB. And by the summer of 2022, they had gotten to the point where they had appointed enough board members that the board was chorus and could actually start really kind of engaging in operations. So that was I think that was just kind of like a big momentous moment. And then the next thing that I think was like pretty significant was that, and it's super important actually, that the foundation didn't just establish an ISSB to try to do a better job than other existing standard setters that were out there trying to help investors, to get the information that they need. It really tried to also consolidate. And so even before announcing that they were going to establish the ISSB, they basically had identified in the landscape the other related organizations. And so the ISSB, the CDSB, integrated reporting, I was involved with all three of those organizations. And so I could sort of see it from that side, but there were also other acronyms that were out there, the Task Force on Climate-Related Financial Disclosures. And really they helped they consolidated the organizations that they could, and then, also worked very closely to bring that guidance together into one place. And so it's really simplified in a lot of ways what certainly like the voluntary investor standard setting landscape is dramatically different because of the ISSB. And so they consolidated the organizations. They've taken a bunch of the existing guidance that companies were already around the world putting into practice, and then brought that into our initial standards. So IFRS S1, which is our general requirements standard, and then also a S2, which is specifies more climate specific sustainability related issues that would be relevant to investors. And so that's done a lot to bring everything together into one spot. And then in terms of how that's been viewed, I think the significant accomplishments are, a few different ones. IOSCO, the trade organization that kind of oversees the securities regulators around the world, they had been following our work and endorsed the standards S1 and S2 as being fit for use in the jurisdictions of their members, which doesn't translate into any regulatory change, but it does make it easier for then these jurisdictional regulators to go back and to consider whether and how to incorporate the ISSB's work into their standards. IOSCO's only done this a couple of times. Basically, the last significant endorsement was of the IASB's work back in around 2001 or so. So super critical at that time to create more of an international set of accounting standards and really simplify the landscape then. And I think it's going to be equally momentous when we look back in the future as well. So where we are now is a number of jurisdictions have announced their intent to adopt the ISSB's standards, and I think it's roughly over 20 that are currently in the process of trying to decide how and in what ways to incorporate ISSB guidance into their local regulations. But when you think of just those 20 jurisdictions, it reflects about half of the GDP in the world, and also about half, just over half of the global emissions, greenhouse gas emissions, when you think about in terms of like business activity measured that way. So it's still a very fraught time in terms of like we don't know how these consultations will go, so but we're closely tracking it and trying to provide whatever guidance we can on that.
Yeah. Yeah, I saw your press release just went out on that. It was impressive numbers in a relatively short period of time. And just to remind everyone, you can't require anybody to follow your standards. So that endorsement is very important it's sort of an endorsement of the work you're doing. The fact that these jurisdictions are willing to pick up and say, yes, follow those standards. That's kind of a good housekeeping seal of approval, I guess, if you can call it that, for what you've been able to do so far with that. So that's great. Well, with that, get ready, Jessica. I'm going to get ready to do the next question. is that we've used a lot of terms already, but like anything new, there's a special vocabulary that goes with it. So our next question to you is, we've actually put some terms out there, and we're asking you to tell us which ones do you want more information about, and Jeffrey's going to respond to that. Okay, so what type of thing would you like to know a little bit about? And so these are some of the unique terms that are very much in the vocabulary in the sustainability area. So if you can give us some feedback, that would be helpful. Please don't pick them all.
Maybe they all need to be answered. I don't
And
know.
now, we had them all on a list, and we thought maybe there'd be certain you particularly would be focused on. Are you showing it, Jessica? Can you share what it is? Yeah, so it looks like, Jeffrey, you get to pick any of them. It looks like risk and opportunities is probably question. Definitely double materiality always comes up in this conversation, but feel free to pick a couple there, and maybe start with what do you mean in your standard? Because that's a key item in your standards, is risk and opportunity. So what does that mean?
Yeah, so I think, when we use risk and opportunity, part of the reason we use it is, I think we want to be really clear that investors aren't only concerned about downside, exposure, for example. So sustainability issues really create some challenges, but also opportunities, and there's upside potential as well. And so I think we use that language to kind of reflect that there's two sides to a lot of these issues. But I also think of them as being some of like the building blocks to thinking about strategic planning, risk management, and ultimately governance. So when a business is trying to take stock in like what it's thinking about for the future, that requires planning. And so risk and opportunities is some of the language that we focus on there. One important caveat there might be that we're not, again, like looking for any sort of risk or any sort of opportunity. So we also use this language of thinking about what would affect a company's prospects. And there we're really thinking in terms of what could affect the way that the future cash flows of a company might look like, and that's through, the products and services the company is selling and providing. It's looking at like, what it's investing in right now. It's thinking about the risks related to that. And so, we're trying to ground that in what we think of as like the type of information that could reasonably be expected to affect an investor's decision making. And that's the traditional definition of materiality that we've kind of used in financial accounting for a long time. So that probably translates then, or could be a nice transition into what do we mean then by double materiality? And so, when you think about where the demand for sustainability disclosures and reporting has come from, it's in a lot of ways, it came from, I think, a similar place as the demand for audited financial statements, and regulation of that. When you think of like the stock market crash first in London and then in the New York Stock Exchange, that led to the creation of the Securities Exchange Act here in the US, but also securities regulators being established around the world. That was really to try to reestablish trust in capital markets, because investors had been lied to. I think you look back, say in the late 1990s, around the Exxon Valdez, when that incident happened, there was in some ways like a similar crisis of trust. Not so much that investors were saying, well, we don't trust the numbers a company's producing, but it's really trying to understand like, what are companies doing in order to earn the revenues that they're earning, and so that early disclosure that came out of that was focused on trying to identify significant impacts that a company's operations can have on the world around them, whether that was people or things related to the planet. So that approach is thinking about, it's been called sort of impact materiality. And it's not that it's not at odds with it, but it's not identical to kind of like this traditional notion of materiality. The key thing with the traditional notion of materiality is like, what's going to like move the needle with investors in terms of decision making? with the impact materiality, you're thinking about like, what are some of the key things that could happen? And, the reality is that there are externalities that, economies and jurisdictions don't really capture. And so no one really bears the public maybe bears the cost of that, but the entities that are impacting those, creating those impacts, don't bear that cost. And so there's a different approach to materiality. Now, certainly, like the things that companies do absolutely can affect where they stand with their employees, where they stand with their customers, what sorts of legal liability there might be, how they're sort of viewed from a governmental perspective. I mean, there's a lot of overlap, but these two things are sort of different constructs because they're trying to capture different aspects of company performance. So the phrase double materiality is these days, it is written into law, actually. Essentially, it's written into law. So the EU had set out their new, pretty expansive corporate sustainability reporting directive, the CSRD, and required companies that are going to be affected by that law to follow standards that were going to be developed by the EU. So they've developed standards, and written into that is basically that you'd have to disclose something if it would trigger disclosure from a sort of a financial materiality perspective, so an investor would care about it, or if it would be something that could have a significant impact on someone affected, a stakeholder affected by a company. So it's an additional trigger for disclosure. I don't love the term double materiality because it doesn't really kind of convey, what I think is when I think of double, I sometimes think of like double filters, or like something that's sort of run through two hurdles, right? And I think for a lot of investor issues, there aren't that many investor issues that an investor cares about this, but no customer cares about it, no employee cares about it, no community member where those operations are cares about it. I mean, nobody cares about it. If nobody cares about it, I don't think an investor is probably going to care about most of these things. So in a lot of ways, I think actually the original double materiality is probably investor materiality, because a lot of those things are, things that a company has to manage, and if they manage it well, because of, who it might affect and what might do for the company's prospects, investors want to, to know that that's being managed well. But this is where we are. So double basically means it is subject to either, think of it like financial or impact materiality, and it can be either trigger. But that does result then in more expansive disclosure, because there are sort of two thresholds that could get you there.
Good. I'm going to ask you to, because it relates to the next question, to sort of take on interoperability here, because we're also getting some questions in chat about you said it consolidated some of the organizations, but not all the organizations. You mentioned the EU. There's other organizations out there. Mark Beasley put in a question about the SEC. What do you think about that? So if you can sort of talk about interoperability and how you are working with this again, we didn't eliminate everyone by the consolidation. We reduced it, but not eliminated. So if you can kind of comment on that.
Yeah. So the way I think about interoperability is, if you measure something under one set of rules, are you going to need to remeasure it under, in a different way, under a different set of rules? And if you do, then now you've got, something that's not very interoperable, because it's a related concept and it's getting measured a couple different ways. And so it doesn't work really well together. And sometimes that may be inevitable, but to the extent that we can avoid that, I think that would be good. So if you can measure something once, and then in another, under another regime, that's also the same way that you would measure it, then a company that's subject to both sets of rules can measure something once and use it for two different purposes. And that does make it potentially better, Or you might find that, something's measured under one regime and it's not measured under another regime at all. I think that's, in a sense, that's also still, quote, interoperable, in the sense that it's complementary, not really duplicative. But what we're really looking to avoid is having something that is just different enough that it has to be measured another way, but there's not a lot of benefit to the remeasurements. I will say that trying to manage interoperability is not easy, and it is it's something that will always be an ongoing issue, because standard setting, standards continue to evolve, rules change, etc. So even if you get something that's relatively interoperable, you got to work to keep it so. And I think that creates real challenges. So for me, the building block approach, if we can get to it with some interoperability, is really the ideal, where rather than saying we're going to do this our way, but try to make it, as much of it similar as possible, but there's different pieces of it that are, it's like if we give you a long list of like, these are the parts in building this thing that you can reuse when building that thing, I'm not sure how useful that is. It's a lot easier to have like one set of instructions and say, build this thing, and when you're done building this thing, then we're going to ask you to build a little bit more on top of that. And that little bit on top of it could be different from, in one jurisdiction to the next, but that you don't have to rebuild the core each time. I think that's really what we're looking for. But that requires essentially that different jurisdictions don't create like a version of something that is their own, as close as possible, but ultimately their own version all throughout the whole thing. It's like just directly point to it and then build on top of it. So to Mark's question about the SEC, I would say, when you look at the original rule and then the scaled back version, I think actually the scaled back version is a lot more focused on materiality. And so ultimately that actually is more aligned with where the ISSB is, because everything in the ISSB standards is subject to investor materiality. So if it's not material, then we don't expect a company to disclose that. So they've actually landed in a place that is more similar. But because it is it's written in SEC language in its own way, it's there are parts that could be viewed as more, and some parts that could be viewed as less interoperable, where you might have to measure something a different way. What it is certainly not is it is not something where they would just accept as an alternative regime the ISSB's, say, like S2 to comply with the SEC's climate disclosure rules. It could be in the future. I mean, we know that it was back in 2000, around 2010, a little before 2010, the SEC dropped the reconciliation requirement for the foreign private issuers, so that they don't have to reconcile their GAAP to US GAAP as long as they're using IASB standards as issued. So we might get there in the future. They actually mentioned that in a footnote in the 800 pages of that rule. They talked about how they thought that it was kind of too early to really opine on that. So they just sort of said, like, for now, we're not doing that. But I think that's ultimately the sort of thing that would be the most useful, probably for capital markets, especially for like any company in the U.S. that's going to also be subject to international requirements. And if the ISSB ends up being a global baseline, I think that would be it'd be nice that they could say, like, we could satisfy the SEC rules by largely just following something else. So we'll see where that ends up eventually. But we're there's a lot. We can talk about the SEC rule. There's a lot still to be sorted out on that for sure.
Sure. So thank you. We're going to bring up the next final knowledge check, because I think this is going to set up some of the questions about just the different views and geography, different views. Let's just put it that way. So let's bring up this next question. And this is really just to try to get a little information from you about what's the impact of all this. I have to watch the word impact at different meetings, but okay. So looks like about 60-40 between international operations. So the reason we asked this question is it does bring up the difference. We've mentioned the SEC, you mentioned European Union, you mentioned ISSB. We haven't mentioned California yet, but they somehow get thrown in the mix here as well. And you have different parts around the world. And you also have different views about this. So So I think the question we want to key up here is how does the board manage the fact that these are different views about sustainability and what should be reported or maybe not reported and all that. So how does the board deal with that?
I mean, the reality is like, so it's pretty complicated, and it's pretty complicated not just because the world is a complicated place, but I think also that the domain of sustainability oversight, in a sense, is different, right? It is the upside is that it is not as well established, and so when you think about what did the IASB have to essentially do in order to become a largely global standard setter, they had to go around and get all of the domestic gap producers around the world to sort of stop issuing new standards and start sort of engaging with the IASB to contribute to the use of that as an international standard. We don't have that same sort of landscape that's well established, and so part of what the challenge is just even trying to figure out who's responsible for oversight of sustainability disclosure in different jurisdictions, and it's not always obvious. So that is very complicated, but we track that and engage with these different jurisdictions. The thing we're most focused on is trying to make sure that they understand what we are doing and how we would sort of the things that we would care about in terms of how our standards were implemented. So we've actually put out a jurisdictional adoption guide that lays out some of the key things that jurisdictions should be thinking about, because if they're going to if they're just going to kind of point to our standards and say like, that's just use those standards just as is, that's super simple. But if they say, oh, this part, they carve out a little bit here, or they extend some, transition issues, they expose it only to like certain types of companies, is that going to be a big deal or not? And the thing that we're most concerned about is although we've consolidated the voluntary landscape of standard setters, we are at risk that the world could have a very fractured implementation of this. Even like some countries adopt and some don't, and some that do adopt in a very narrow way, others in a more complete way, but not totally complete, and then some in a pretty straightforward way. That's still going to leave global companies, multinational organizations, in a very difficult position trying to comply with all of those rules, and it's going to leave investors with a very fractured disclosure landscape that's going to make it hard to know whether they're getting the information that they need or whether it's been produced on the same basis or not. So that's one of like the very big challenges that we have, I think, is just trying to figure out what are jurisdictions thinking, and then how do we make sure that the feedback that they're going to get is going to be informed on what some of the key issues are. It's up to them to decide. But what I really hope is, if you think about like financial accounting versus tax accounting, in 140 plus countries around the world, you've got the IFRS accounting standards that can be used, and that's simplified a lot. It's not perfect, right? But it's simplified a lot. But when you think about like, what about tax accounting? Like tax accounting is different everywhere around the world, and that makes it really hard for big companies to like deal with. But I also think like it's a long shot to imagine that you're going to get every jurisdiction around the world to say, let's all construct our tax bases in the same way and with the same rate. I mean, it's never going to happen, and it probably shouldn't happen, because they have different things that they're concerned about and different ways that they need to sort of fund themselves. So my hope is that from a sustainability perspective, for kind of that core part that you need to really understand financial statements, investor needs, if that's a relatively robust thing that could be applied most, anywhere around the world, let's make that the building block, and then recognize that jurisdictions are going to have specific things, specific issues, specific concerns that they're going to want to encourage or discourage from a policy perspective. They'll add that on, and that'll just be part of what like the complexity of the world. But if they do that all the way down to like the investor stuff too, then I think that's going to be exponentially more challenging to cope with, and also a real detriment to investors being able to actually understand the information they need to understand in order to make their investment decisions.
Good. Give everybody a heads up. We got about 7 minutes left. So I'm going to ask Jeffrey one more question. Not that I don't have more, but I wanted to make sure we gave a chance for anybody else has a question to be able to jump in here. I guess the next question is looking forward. You've introduced a couple of new research projects and you issued the climate related as a theme, but you also then talked about maybe developing some other theme guidance to follow on that. So you maybe want to comment about kind of the coming attractions, if you wish. What's coming up next?
Yeah, so I think of it in sort of like two different tracks. So we've got some new projects that we're going to be doing research on. So we're going to be thinking about human capital issues and then also biodiversity issues as well. So and I think the reason so that's one part. And then the other thing that we're going to be doing is, since the ISSB is now is responsible for the SASB standards, which are industry specific and which I helped to develop over the last 10 years plus. We know that those standards need to also stay current, and so there's two related tracks. It's the industry standards that we're going to be working on, as well as doing some new research on human capital and biodiversity. And those two things aren't entirely independent either, in the sense that, when you think about like human capital issues, there's the world today is not the same as it was back in like 2010. I think there's a lot of evolved understanding about like the nature of how companies engage with their employees and what are going to be some of the key issues. And there have been all sorts of issues, like the pandemic, not the least of which, that have really kind of transformed the way that companies engage with their workforce. And so those things weren't really anticipated back when we first developed the SASB standards. So there's some additional human capital work that I think we've heard back from the marketplace that's going to be a key thing to focus on in general, and also from through an industry lens. And then biodiversity ends up being one of these really systemic, really foundational issues that is of critical importance to our world. But it's also really complicated because, we've got a lot of benefit of 100+ years of like evolving climate science that have helped us to like understand what greenhouse gas emissions are, which can be like identified, measured, scientifically studied. That a lot of that's true when it comes to biodiversity issues, but it's a bit more challenging in the world of nature, because some aspects of nature, it really only affect certain parts of the world, and other parts, the nature issues sort of move and go beyond borders and jurisdictions. And so it can be pretty complicated to understand, but we think it's really important to look at what, from where we are today, what are some of the key aspects of corporate activity that, especially, especially in certain industries, where understanding more of the activities companies are engaged in that make them either dependent on certain aspects of nature or impacting certain aspects of nature, that investors are asking information, asking for better disclosure about, what is it we can do there. So we're going to do work on human capital and biodiversity to see whether there are good opportunities to improve the ISSB standards in some way. And then we'll also be working on the SASB standards. So that's going to be a big chunk of what we focus on over the next couple of years.
Great, thank you. I'll just open it up. Anybody have any other questions? Something you absolutely want to get Jeffrey to answer before we get off? Anything else you would like to suggest?
How's he so shiny? Well, that's just nature. That's I buff in the morning to make sure.
That was a lot in the chat, but I wasn't going to ask that question. Okay. Alan did ask the question about assurance. We haven't talked about assuring this information. How much does because a lot of jurisdictions require a certain level of assurance over this information, financial, non-financial. So how does that intertwine into the decision process here when you think about that?
Yeah, we spent a lot of time thinking about whether the standards that we're producing could be assurable. We don't have a mandate to require assurance, but we think that if if a jurisdiction were to want something to be assured in order to incorporate it, then we need to make sure that the the assurance community feels like that it is going to be what have like suitable criteria that could serve as as part of an insurance engagement. So we do engage with the auditing community to understand that. And I think that also then helps us understand whether we're producing high quality standards, because I think seeing whether or not you can assure it is a great way to also see whether you'd be able to build internal controls around something, whether you'd be able to automate it and build a system that could help to efficiently produce the information. If you can't, then you should ask whether or not this is going to be useful information, whether it's really going to be cost effective to produce. So I think it serves at least a couple purposes for us, even though we don't have the mandate to be thinking about assurability.
Great, thank you. Well, Mark let's make this our last question. Mark asked, of course, the academic question here is, what do you tell your students? What do you tell your students about, should they pursue the career opportunities? As you look down, you probably have a unique view of opportunities in this area. What do you see as the opportunities, and what do you tell your students?
So yeah, to me, I think it's super exciting, because I feel like this is like we're at like another wave of increased transparency that is expected of companies, and so that then means that there's a huge opportunity and demand for the skill sets that accountants have, and I think that that's going to ultimately be from an external reporting perspective, an assurance perspective, a tax perspective, and also maybe more important than all of that, from a managerial accounting perspective, because none of this really matters if it doesn't actually relate to like things that companies are doing, and that's a big part of like the managerial accounting part. So I think there's going to be this is going to I think be some of like the lifeblood to ongoing demand for the skill sets that accountants can have.
Mm-hmm.
I think that what I still tell them is like, you should still be good at thinking about like a management accountant or external reporting or assurance or legal or whatever, like whatever, like all the things that the companies were already doing. Those are still foundational aspects of like where you can sort of build a career, and understanding sustainability issues will help you be able to do those jobs better. And then you can also recognize that because of the separate standards and regulations that exist, there'll also be opportunities to specialize as well. But specialized opportunities will always be sort of like a narrower set than the broader set of things that are impacted by, because they sort of like interact with these issues. So I tell them to be pretty optimistic, but also sort of like be really good at something and understand how sustainability is going to relate to that.
That's great. Jessica, if you can bring up our final slide. Yeah, I just got back from the ISSB board meeting in New York last night, and sustainability reporting, preparation, controls, all that, as I say, if not us, who could possibly be doing it? It's definitely in our wheelhouse, in an area that we should definitely be, where it is viewed as one of the future growth areas of the profession. If you think about all the skills we have, it's right in place for that.